to speak with you all today. We really enjoy working with you all, with CDI and with the scholars, and so it's always great to see you all. We have this presentation today, and also I'll be speaking to you all Introduction to Investing, and then we're going to also talk a little bit about ESG, or socially responsible investing, which is kind of like a bit of an add-on to investing. I recognize that everyone here, it's an assortment of awareness and familiarity with investing. So, we can please ask whatever questions come to mind, or if you'd like me to repeat something or rephrase it. My camera's not that great, but if you can kind of tell, I have blonde hair, and so sometimes my blonde hair gets the best of me. So definitely ask questions, and I have the chat box open, and I also have the participants list open, so I'm pretty good as well. Like if you click the raise your hand or something, like I'll make sure that we, there we go, yeah, that we make sure to make this as interactive as you all would like. So great, with that we'll get started. Yeah, today's topic, so slide 2, please. Awesome. Yeah, so we're going to, again, the plan for today, and we can always deviate from the plan if there are questions that come up or things that are interesting to you all. Introduction to investing. We're going to talk a little bit about successful investing, which I'm sure is what's on all of your minds as well. And so we're going to talk a bit about how to set yourself up for success. Which is what CDI is all about in general, but we're going to kind of drill down on the investments piece as well. And then again, that introduction to ESG investing, which may be a phrase or an acronym that you've heard quite a bit recently. So kind of jumping into the introduction to investing. So let's define it. What exactly does this mean? So it means putting money or funds, or to be honest, I could even argue time, into something, and you are looking to get some good out of it. If you're looking to, what we're going to be talking about is more focused on stocks and investing in companies. So that's where, let's say you invest in a stock, or you buy a stock and you hope that stock price moves higher. I think that investing as well applies to many things beyond kind of money and stocks as well. For example, you could make the argument that you're investing a lot of your time in yourself right now by participating in this program and participating in CDI, and Wendy and Isabel and everyone else is investing in you all. So many ways that you can invest, but again, what we're going for here is putting resources, time, money, whatever it is, and looking for some sort of benefit or gain. So then why invest? We're going to be focusing on money today. This is Money March Madness. So one of the big reasons why people invest is to grow your money. So you're starting with something, and Isabel and Wendy were speaking about how you've got some retirement sessions coming up as well. Though that may feel far away, it's the same. So we're looking to take what you have now and grow it so that there's more in the future. Another reason why people may invest is they have some goals, some short, medium, long-term goals, and that kind of goes hand in hand with what's part of your plan. Maybe short-term goals is you're looking at college or graduate school or some other educational program that you need to pay for. So you're looking to invest funds to help you support your education. Maybe more medium-term is buying a home. And then, for many of us here on the longer term side, it will likely be retirement. But just in general, things in the future is what we're looking when we invest, why we're doing it. We could go to the next slide, please. So what is not investing? Oh, what is retirement? That's a great question. So retirement is it's when you're done working. So you work for a while, you save. As you're saving, then the plan is at some point, for some people, kind of often they ballpark it in like 60s, 70s. Maybe some people it's earlier, maybe some people it's later. They stop working and instead they retire from their job and they may do something else with their time. They may volunteer, they may take on maybe a part-time job, or maybe make a slight career move. But kind of the way I would think about it is starting to kind of take a step back from like the formal workforce. Does that make sense? If anyone else wants to chime in, if I didn't explain retirement well. We good? Okay, good question. So yeah, exactly. Taking a step back, maybe not doing the 9 to 5 so much, and spending your time doing, maybe things that focusing on hobbies or something else that you might be more passionate about. Maybe the big thing about retirement is that you're no longer making that income that you did from your job, and instead it's this money that you've saved up over the course of your career that's now supporting you. So it's a bit of a change there as well, like with your income. So great question. So kind of going back into investing, because it's definitely going to go hand in hand with how we make sure you can retire early. That's always the plan, is what's not investing. So investing is not kind of crossing your fingers and saying, hey, like, I like the fact that there's 3 vowels in this name of this company that, I think that's a good sign. Like, no, like that's not gonna, having 3 vowels in the name, that's really arbitrary. That doesn't mean anything. That's not going to tell you if it's a good company to invest in. So investing is doing some research and kind of putting a bit of thought around, like, okay, is this a good place for me to kind of allocate money, for me to put my hard-earned money and use it to grow that money? So sometimes investing does get confused with speculating or gambling. And especially more recently, and this might be a good one just to hone in on a little bit. I'm not sure how many of you are familiar with Robinhood, or there's some other trading platforms that have become a bit more popular recently. Some of the activity, at least that you see in the news going on in platforms like Robinhood, I would say gravitates a bit more towards speculating and gambling than necessarily investing. The headlines that I've seen, many of us heard about GameStop. That was in the news quite a bit. Those were not necessarily long-term investments. That was, there was a lot of price movement, so a lot of volatility, and a bit of a short-term play. So again, big difference. Actually, we go to the next slide. It kind of outlines it a bit better. Yeah, so kind of some of the key differences between investing and gambling or speculating. I would say one of the biggest differences is the time horizon. When you're investing, you're thinking longer term. That's kind of why we keep talking about retirement too. Like retirement, that's long-term planning. Gambling, you associate that more with like a casino, right? So that's something where you bet on red, or you're like, you pull down the lever and see what comes across the screen. That's very short-term. So that's a big difference there between the two. Investing as well is, as you're looking over this longer period, you're making long-term decisions. And oftentimes with investing, over the long run, you are gaining. With gambling or speculating, oftentimes actually a series of studies have shown that these short-term investors net lose. So they're more often to lose money when they're done than gain money. A big difference as well between the two is investors tend to use their own money. So those are the hard-earned dollars that you made. Sometimes speculators will borrow money. That also can get a little bit tricky if you're borrowing money and then investing it, and the investment, or speculating with it, and then it doesn't go well. That could put you in a bit of a tricky situation. And I think kind of going back to what we started with is investing, you are looking at the company or whatever the opportunity is that you're investing in, and you're really thinking about it and doing some research and saying, hey, is this where I really want to put my money, or is this really where I want to allocate my time, or whatever it is, and making sure that that is worthwhile and that you believe in and you believe it will do well. Whereas I keep saying gambulating. gambling or speculating, it can tend to be more arbitrary. You might say, okay, well, it's been up for, the stock has gone up for 2 days. I think that means it's going to be a good stock. Like, that's not always the case. So I think the biggest difference between the two, sum it up. So I'll get to you there in 2 seconds, Kayla. Sum it up. I think the two biggest differences, number one, time horizon. Investing, you're thinking long-term. Gambling, shorter term. And also, as you are thinking longer term, you're thinking a bit more about what you're investing in and understanding, okay, here's why I believe this is where I should put my money, and this is where my money will grow. I believe this. So Kayla, what type of websites, resources would you recommend to conduct research? Great question. So I would suggest, so there are a whole series of resources that are free and that I actually use a lot. So first, I don't know if I'm dating myself here, but Yahoo. Some of you might be like, that's still around. But believe it or not, I feel like, and this is also March Madness, and Yahoo does quite a bit with, sports too. But Yahoo Finance is a great one. Google Finance, they've really been building out quite a bit. So if you just go into Google Finance, you can type in any stock there, and you can see how its price has moved recently and where the price is now. So Yahoo Finance, Google Finance is another one if you like that platform. There's another one, I can type it into the chat here, CNBC. It's also a TV show. To be honest, I can't even have CNBC on that often. It's just nonstop, financial news, but their website is great and has a lot of information there about stocks. And then a lot of newspapers too. So if there's a newspaper that you like, if you like we're in DC, if you like the Washington Post, if there's another New York Times, what have you, they all have finance sections as well. But I think if we're looking for a website, Yahoo Finance will have a lot of great stuff there. Google Finance is building out their platform. Both of those are free, and CNBC is another free one as well. There are other websites, but you have to pay to get their content. And to be honest, I don't always find that the content's actually that much better and worth paying for. Anyone here who is in college or is in school, I'm in school right now too, so I get it. Everyone else who feels like they're in Zoom University, I'm with you. So I know through my school library, I have access to the Wall Street Journal and the New York Times, because some of those you do need to pay for in order to get access to everything. So that could also be a good one to check with your school if there's a resource there that you can access through their library. And then, so what would you strongly recommend to invest in stocks? Yeah, so let's get into that. Great question, Aiden. Let's jump right into investing in stocks. So we can jump ahead to maybe slide 9. Investing in the market. Yeah, so real quick, just to take a step back, there are different things that you can invest in. So we're talking about stocks. I think stocks is also what comes to your mind is investing in companies. There are also other instruments that you can use to invest. So you can invest in bonds. Bonds, it's buying debt. So a company will issue stock. So I'm looking at that, I see Ford. So Ford, you can buy Ford stock. Ford also issues debt. So they will borrow money, and you can also buy a piece of that loan. It's a different type of investment. It's not as easy for a retail investor to buy, a full piece of Ford's loan. So we're going to focus on stocks today. Funds, though, is another one that as you are kind of becoming a bit more familiar with investing, you're going to see mutual funds. You also see something ETF, which stands for Exchange Traded Fund. What those funds do is that they have a sector, a geography, a type of company, or a section of the market that they will focus on. And so, for example, with the funds, one fund actually that has been an outperformer recently is there's an ETF that focuses on esports and video gaming. And so what this ETF does is if you buy a share in that ETF, then shows you it's holding. You're buying a piece of all of these companies that are involved in video gaming. So that's just an example, but funds are a way for you to get exposure to an assortment of stocks in a specific category, and the categories can vary quite a bit. Let's focus on stocks though today, because that piece is then what makes up these funds. So one at a time. Well, we'll get there, Ivy. That's a good one. So when you think of stocks, if you guys want to throw in the chat, we're thinking of a stock or even a fund or any question, any of these. What are some companies that come to mind? Like if you're thinking of a stock you want to invest in, and if you guys want to even type in the chat, you can go for it. But when you think of stocks, is there a certain company that comes to mind? Tesla, yes. Oh, GameStop. Oh my goodness. All right. Yeah, we've got a lot here. Okay, this is awesome. Tesla's a popular one. I'm glad Tesla's a popular one. So if we jump to slide 11, I feel like a magician now. Yeah, these are some stocks that definitely come to mind as companies to invest in. They're in the news quite a bit. And I just picked 4 random ones. I assure you, I am actually not a magician. I sent this slide deck to Wendy a few hours ago. But these are some popular ones that we hear about quite a bit. And I also wanted to I love as well what you all wrote in the chat, and the 4 that I have here. I was trying to pick 4 really different companies. So Netflix is entertainment. You've got technology with Apple. Tesla is a disruptor and in the auto space, and then Facebook as well, and kind of this technology and kind of social connectivity, new industries kind of created. So these are all companies that you can invest in. And the other ones that you wrote in the chat too, like Amazon and even GameStop and others, Starbucks, all of these are companies, these are names that you know, and then companies that you can invest in. And the way you can invest in them is by buying stock in these companies. So the companies that you all named, I'm willing to bet a lot of those companies like that you came to mind, you think well of. You're saying, hey, Tesla, I think Tesla's really doing a great thing in making all these electric vehicles. And that's where, the future of transportation is going. And they've really been not just at the forefront, but they've been kind of pushing everyone else forward towards that as well. You're thinking longer term there. With something like Netflix as well. There went from being, I might be dating myself here. I'm not sure if anyone else remembers getting DVDs in the mail from Netflix. Yes, they used to do that. It wasn't just online. And now they're creating content as well, and creating a lot of really value, like content that you appreciate. So all these companies that I'm willing to bet you thought of, you likely think well of. And you likely have a positive view on those companies, the way they do their business or how they've kind of conducted themselves. So those are all good things. That's kind of what we look for. Now to get more into the numbers side of this, if we could go to the next page, please. So what I did here, if you all would like to share the deck afterwards, if that's a little bit easier to read, but so each of these 4 charts are those 4 different companies that we spoke about before. And so you can see the line in each of these is showing you how the stock has moved since January 1st, 2020. So over the last, a little more than a year. So the good news is, as you can see, they're all, the number on the right is higher than the number on the left. We like to see that, kind of an upward slope. It's also, you'll see here that none of these are straight line up. There's some dips along the way, maybe some spikes higher, maybe some pretty big moves lower, but upward trajectory, which is certainly what you'd like to see. And then to really put some numbers behind it, basically if you had said, hey, I'm going to invest $10 in Netflix on January 1st, 2020, how much would that $10 be worth today? So it'd be worth about $16 today. Apple's about the same, Facebook a little lower. Tesla is definitely the outperformer there, and was also the popular one in the chat. So that's just, again, trying to show you or kind of put some more numbers around this, that investing the money in stocks or in companies that you believe in, that you know, and that you have a long-term view on, it can, this doesn't always happen, but it can help you grow your money. I do think one thing that's worth pointing out, I highlighted that none of these have been a straight line up. So if you, the charts in the bottom left is Facebook, and you'll see that one had the biggest dip in March 2020, so that's kind of COVID time. So Facebook really had a little bit of trouble there, but rebounded. And then to the right is Tesla. So Tesla hit, an all-time high earlier this year, but has come down a little bit since then. Again, though, still, if we kind of go from, the January 1st, 2020 point to today, we've got a nice upward sloping line, which is great, but none of these has been a straight kind of path upward. And that kind of leads to, we're going to get to that in a second, talking a bit about like the importance of having a long-term view. Bringing back the whole gambling and speculating. If you were gambling in Facebook earlier last year, March could have been really stressful, and April and May, and when it was still lower. That's again why we're really focusing on having a long-term view. So if there is a move lower for a few months, you're saying, you know what, I still believe in this company. I still think that Facebook is going to be connecting people all over the world, and Instagram and WhatsApp and all these other things that they're expanding into. Yeah, definitely. I would call long 5+ years. I would say, though, in maybe more for investing, at least more than a year. Let's call like the 12 months is like our cutoff. Definitely less than 12 months, we're going to call short term, more than a year, long term. And then, ideally, yeah, let's try to think for at least a few years, if not even longer. So we're going to get back into the nitty gritty here. So if we can go to the next slide. So you're like, Kristin, you've said equities, you've said shares, you said stocks, like, why can't you just use the same word? That's a great question. So something else as well in finance is oftentimes there are a few words that all mean the same thing. So don't let the jargon be something that kind of hinders you. So if someone says stocks, if someone says equities, if someone says buying a share of a stock or buying a share of an equity or of a company, all of these terms mean the same. And so what you're doing actually is you're becoming an owner actually of the company. So when you buy a share in Facebook, you're an owner. You're right there with Zuckerberg. He owns a lot of shares. So you're just behind Zuckerberg, but you and Zuckerberg, both owners of Facebook. So what we're looking for here is for that share price, so for that value of this company to increase, and then your piece of that company will increase as well. Something else that comes into play when you hold a share, a stock equity, is that they'll pay dividends. So what's a dividend? So when a company earns money, there are two things they can do. They can take the money they've earned and they can reinvest it in the company and say, a company that's classic for doing this is Amazon. Amazon is huge. Amazon is constantly growing. So whenever they make money and they earn money, what they're often doing is actually reinvesting that money. Previously it was Jeff Bezos. He would say, okay, we've earned all this money. I really want to go, focus on, maybe it's the cloud system, or I really want to get this whole drone delivery thing off the ground. Like, let's take that money and allocate it here, or what have you. So that's one thing companies can do. The other thing they can do is actually give you money. So they'll pay what's called a dividend. And so the reward, basically think about it, they're rewarding you for being a shareholder, or they're saying, hey, you're an owner of this company too. We made this amount of money. Here's your piece of it. So that's what a dividend is. Some companies pay dividends, some companies do not. It's more common for a company that's growing will not pay a dividend, or will pay a very low dividend because they're reinvesting that money. Whereas a more established company is more likely to pay a dividend because they're kind of they're set already, and they're kind of rewarding you for being a shareholder. You can vote on the company. So every now and then things come up with these companies. Maybe there's an executive who needs to be voted in, and you're going to get a piece, something in the mail or an email saying, hey, we'd like you to vote on if you think, Joe Schmo should become, a board member. You don't have to participate, but it's kind of cool that since you're an owner, you get to participate. The other thing as well with all of these is that it's really easy to buy or sell these shares. So the term you may start to see as well is they'll refer to it as liquid. So a liquid stock means that you can, click a button, buy it, you have it, click something else, sell it, it's gone. So it gives you a lot of flexibility with your investments, which is also pretty important. If we go to the next slide, this is where kind of these funds come into play. And it was also the question before, I think maybe it was Kayla, it was your question about like an S&P index. So let's say you're like, Kristin, I really can't choose between Facebook and Amazon and Microsoft. Like, they're all great. Don't make me choose. Okay, let's not choose. Let's find an index or a fund that focuses on the type of company that you really think is going to do well, that your research and your understanding has said, okay, you know what, I really think that, technology, these larger technology companies is the way forward and will continue to be innovating and so forth. So there are indexes that you can buy that will have those companies in them. So I gave the example before, if you're a big believer in esports and video gaming, you can buy an index that just focuses on those companies involved in that industry. If you want to just focus on technology companies, there are indexes there as well. All different types of indexes. It's gotten to the point now where whatever sector you believe in, you can invest in. You can also just say, Kristin, I want to buy all of the market. I want to buy the entire S&P 500. You can do that. You can buy an index that gives you just like one little piece of every single one of those 500 companies. So kind of we'll call it a very broad investment. So that's kind of cool that you can either kind of pick your company. You can say, hey, Elon Musk, I believe in you. I want to buy Tesla. Or you can say, you know what, I just want to buy an assortment of companies in this kind of broader sector or this kind of broader thought of mine. So I think it's actually pretty cool that you have this flexibility. We go to the next slide, please. So how are companies valued? So this goes also to your question, how do I figure out which of these companies that I should buy or even just start to get my head around this? So there's some things that these all will impact the value of a stock. So it's sales. If we kind of keep running with the Tesla example, oftentimes you'll see news stories about, how many Model 3s or Model S or whatever Elon and Tesla have sold, or how many of their trucks have they produced, or what have you. So definitely kind of sales and the profitability is important. Perceived strength, that can be maybe a bit more subjective, but how well the company's products are received. I think during the pandemic, maybe some of us felt like we couldn't live without online delivery. And when all these stores were closed, we were relying, at least I know I was relying on Amazon to get some things that previously I could just, walk a little bit to the store and pick up. So the strength of a company and kind of what they're doing in their business. Economic conditions. So a great example here would be anything travel related. Marriott didn't do anything wrong. Marriott and Hilton and all those hotel companies did nothing wrong, but a pandemic hit and then no one was traveling. And so that's kind of an example of an economic condition and investor sentiment negatively impacting the stock. So it's saying, okay, it's a pandemic, no one's traveling. All right, well, hotels and airlines and cruise lines are going to be then under pressure. And then investor sentiment, it's like, okay, well, when do we think people are going to be going on cruises again? Or when do we think they're going to feel comfortable flying again? That's when the sentiment piece comes in as well. And that's something that you can, I think, you all very capable, you can gauge that a little bit yourselves. Competitor behavior. Let's keep running with the Tesla example. Tesla came out of nowhere, and you had this kind of establishment of General Motors and Ford, and then Tesla comes out of nowhere, completely changes the game, shows that electric cars, there's huge demand for them, and that they can, people want them, and it can be done well. And so all of a sudden it became, the auto industry became extremely competitive in this whole new way. So that's something as well to kind of keep in mind. Okay, who's in this space? If we kind of also loop in Amazon, so Amazon always expanding. At one point, about 2 years ago, Amazon, there were some headlines that Amazon was going to start doing prescription drugs. So rather than you going to CVS or Walgreens or your pharmacy to get prescription drugs, you can instead buy it off Amazon. All of a sudden, you see the stock prices of CVS and Walgreens and all those guys move lower because it's like, Amazon's coming in and they're going to really change this prescription drug game. I don't think they ended up doing that. At least, I don't get. Yeah. So, but still, that's an example of how kind of a competitive behavior or a change can impact the stock price. And then, there are a lot of other things as well. Headlines can certainly impact the stock price, but over the long term, when all of these things that I've mentioned have a bit more of a short-term focus. If we're thinking over the long term, though, if we're thinking about Amazon, okay, Amazon has an established track record of building great businesses and expanding into new areas, and then continuing to build great businesses there. Google's another example, that they continue to build out their platform and add more and more products that we incorporate into our lives. Tesla, adding more vehicles, improving their vehicles. If we look at, say, okay, do I think Tesla is still going to be doing a great job in a few years? Then that's why you look to buy the stock. And some of these headlines along the way can help you get a sense of, do you think this is a good stock? But just be wary as well that going back to the Marriott example, Marriott, I'm going to express my personal opinion. I still think Marriott's a great company. These are just tough times for any hotel company, even if it's the best run company or the worst run company. We can go to the next slide. So successful investing, that's what we want to do. We want to make sure these are good investments and we're not just speculating or, this made up word that I've come up with this afternoon. So if we go to the next slide, they're kind of these to kind of boil it down to 2 key points. Establish clear goals. A timeline could be helpful as well, and keep your expectations realistic. In a previous slide, I showed you, hey, if you had $10 on January 1st, 2020, here's what it would be today. Most of those are right around kind of the 14, 16, 3 of the 4. Tesla's up at 80. That's wonderful. I'm not complaining. No one's complaining. That may not be a realistic expectation, though, to assume that every investment that you make, every $10 investment, about a year later is going to be worth $80. That's awesome, but it may not always be the case. So making sure you have realistic expectations, saying, okay, historically, this company has grown by X% every year, or over the last 5 years, it's grown by this amount. I think it could potentially repeat that. That's one way you can set realistic expectations. Also with your goals and your timeline. When we started the webinar, we talked a little bit about how investing is a great way where you have a short-term goal, paying for education, medium-term goal, buying a house, buying a car, looking longer term, retirement. Those are all different timelines as well. So if we're looking to invest money, and it's important to kind of make sure we say, okay, here's what I'm aiming for here. And it also kind of helps you make sure you're not gambling, is saying, all right, here's my goal. I want to grow this. I'm going to give it this amount of time, and we'll go from there. This goes hand in hand. It's kind of developing a plan and staying disciplined. I highlighted in that Facebook chart that Facebook, of those 4, Facebook's the one that kind of got hit the hardest when COVID started. So it's saying, okay, let's say you had invested that $10 on January 1st, and all of a sudden your $10 is worth $7. It's saying to yourself, okay, wait a second, I had a plan. My plan was that I was going to hold on to this investment for at least a year. I still think Facebook is a good company. I think this pandemic, we will get over this at some point. But actually, maybe Facebook will be better off, because if we're all stuck inside, that's actually how we're going to be staying connected with each other. I'm making this up, but these are all also things that, as you're thinking about Facebook, you can come to the same conclusions. So having that plan, though, and staying disciplined will help you kind of achieve that longer term game. And again, studies have shown, and people have gone through a million times, the short term investors, the gamblers, the people who are making lots of trades, they actually net lose. And that's not just like retail investors like us. Like, that applies to hedge funds too. That applies to people who their job is to make money, to invest in things and make money. The ones that do a whole series of short-term trades actually more often net lose money. So something to keep in mind. Again, we want to focus on long-term. If we can go to the next chart, please. So we focused quite a bit on 2020. Let's look at like the last 10 years. It's great. Again, we love the fact that, it's going from the bottom left to the upper right. We like that kind of upward trajectory, but it hasn't been a smooth line. A whole series of things along the way that have caused the markets to go up or to go down, whether it's presidential elections, whether it's Brexit. So that's, an international event impacting the U.S. market. We've got the financial crisis a bit in here as well. All sorts of things can impact the markets. But if you stay focused on the longer term, you will end up ahead. And then one last slide here, focusing on 2020, just showing the severity of it. We were getting a lot, it was, a lot of people were very worried, as everyone was. It wasn't, the markets were in a tough spot. Obviously, the health issue was very, very scary. The markets responded to that, and you can see a bit of a correlation there between, what was going on with COVID and what was going on in the markets as well. So did, by, if you call it, late August, early September, the market had recovered, but they were still down at one point 30%. So if we kind of go back to that $10 example, your $10 that you put in on January 1st dropped down to $7 in March. And that's stressful. And you don't like that. And that's a big move lower. But focusing on long term, holding on, and saying to yourself, okay, are we going to get over this? We will. Works out. So that was kind of our run through on investing. The next few slides I have here are focused on ESG investing and the concept of socially responsible investing, which is kind of taking this idea of finding a company that you believe in, not just financially, but also the way they conduct themselves and the company's values. So that's kind of this whole nother layer that we can add on. Before we dive into this ESG and social responsible investing, does anyone have any questions just about stock or investing or anything of the like? Okay. Oh, excuse me. Okay, that's a great question, Ivy. So here's my opinion on what the first step is. I think the first step, and this might sound kind of weird, I think the first step is making a budget. So it's kind of taking the whole thing back and saying, okay, wait a second. Here's my monthly budget. Here's how much money I'm earning or I'm able to make. Here's how much it costs for me to live. Here's how much it for rent and for basic living expenses, and saying, all right, money in, money out. here's my net number. Ideally, you are able to save some money every month. So the money that comes in is greater than the amount of money that goes out. With that money that you've saved, the first thing I would suggest you do is create an emergency fund. What this means is an amount of money you've set aside that can cover a few months of living expenses. So you basically, it's the worst case scenario. You've lost your job or something has come up and you can't work and you don't have this income coming in, and you have this pool of money sitting on the side for you to pay those living expenses so you can keep paying your rent for a few months. You can make sure you're not going hungry for a few months and all these things. This is something that we encourage everyone to do. It doesn't matter how much money you have or how secure you think things are. Having this emergency fund, or you may also hear it called like a rainy day fund, I'd say that's step one. So we've got, and Ivy, you may not have thought I was going to go like this far back, but step one is making this budget, setting some money aside in your emergency fund. Once you have that, you then have this other, you might have this other pool of money. So again, money in, money out, you're saving. We've allocated some savings to the emergency fund. If there's money left over, that's what you invest. You do not invest the emergency fund. Because again, let's say you invest your emergency fund on January 1st, 2020, and then your emergency fund drops 30%. That's not ideal, especially when things are going wrong. That's actually when you may need your emergency fund even more. So we want to make sure it's super safe. That money is sitting in cash, it's sitting in a checking account, a saving account, wherever it is, it's not invested, it's not moving. It's this other pool of money that you may have. That's what you can then look to invest. So I think step one is build a budget and see what you have and make sure, again, I can't harp on it enough, emergency fund sitting aside in a special place. Then once you kind of have that, setting your timeline. Maybe you have a goal. Maybe you're investing for a car or a house or your education or just anything, vacation, whatever you'd like. It can be whatever you want. Setting your timeline and then doing some research. I would start with companies that you know. A famous investor, his name is Warren Buffett. You may jokingly hear someone refer to him as Warren Buffett. But Warren Buffett, and he has done very well over his lifetime. His core principle is he invests in companies he knows. So start with companies that you know and you're familiar with. Do a little bit of research on them. Look at their stock price, like we talked about. Read some recent news about them. All of these companies' websites are also great places to learn. And that's a great way to say, okay, I go to Starbucks all the time. Starbucks is expanding. I really like the food they have too. I have read they're going to keep expanding globally. I think that's great. And so maybe you then buy a share of Starbucks. Does that help? Is that kind of, Ivy, did that answer your question? I'm willing to bet I went way too deep on that one, but any opportunity I have to suggest someone create an emergency fund for themselves, I'm going to jump all over that. Mohammed, I hope that also answered your question. Oh, what age? Excuse me, I'm sorry. Okay. So my so I'm not going to lie, I'm not on Robinhood. I have heard that people under the age of 18 can open Robinhood accounts. I do not know if that's true or not. I would, at what age? I think my understanding is that you need to be at least 18 in order to open one of these accounts. I could be very wrong. I admit I could be wrong there. I think it goes back to maybe not the age, but to what I was saying before about, do you have money set aside that you can invest? Are you kind of in a relatively stable spot financially where you have money on that you have your emergency fund that's separate, but you have money as well that you can then look to invest? I wouldn't say it's an age thing. I think it's, do you have less money sitting aside that you can put to work for you and that you do not expect to need. Again, we're focused on long term. This is money that you don't expect to need within the next year. If you're looking at your checking account and you're saying, okay, I may need all the money sitting here within the next year, then you should not invest it. If there's money sitting there that you're like, you know what, I think this portion I won't need for the next year, that's then where you can look to invest. So not really an age thing as much as where you are in your finances, and then also like where you're comfortable. So we work with individuals on investing. I kid you not when I say that 2 weeks ago, spoke with a couple. They are in their late 40s, early 50s, no investing. They were like, this market, we don't really understand it. We haven't really had time to research it, so we haven't invested at all. That's okay. I think rather than age, it's, do you have some money that you don't need within a year, and are you comfortable? Hopefully that answers the question. So I'm sorry, it feels like I dodged it. That was not my intention. Cryptocurrencies. All right. That's a good one, Kayla. So the cryptocurrencies are adding a lot, they provide a lot more information. So in my background, actually, I worked with companies that, the original currency, gold, going way back in the day. And they are incorporating some of, the cryptocurrencies actually into gold. And so that you can tell that, this is going to go into ESG investing in a second. You don't want gold that was mined in, think of it like blood diamonds or like, bad gold that was mined in a way that's not legal, not okay. And so one of the ways that they're making sure that none of this bad gold gets into the overall system is using some of the technology and kind of principles that the cryptocurrencies use as well, this ability to kind of track and authenticate things. So I think that's really cool. I think that like the technology and these ideas behind cryptocurrencies are applicable actually well beyond this space in a really positive way. So I think that's wonderful. I'm not sure I can really get my head around Bitcoin just yet. So I do think it's a really interesting space. I think that there is a lot of potential here. My concern with it is that maybe it's still like, think of it like a toddler. It's a toddler. It stumbles a bit and every now and then it falls over and, does something that is inexplicable, like toddlers do. But like maybe when it grows up a little bit and kind of has a better sense of things and a bit more stable, then I would, definitely be, so it's something I would keep an eye on. I personally am not investing in it just yet. But the fact that, we've talked about Tesla, they're saying they accept cryptocurrencies. PayPal is kind of a Tesla-related company as well. I'm 99% sure I saw a headline about Visa starting to kind of look into offering cryptocurrencies. So they're definitely going to be becoming a bigger part of our lives. I just don't think that they're toddlers. They fall sometimes. I kind of like to see them walking a bit more confidently first. So I hope that's helpful. That's my personal point of view as well, I should say. Okay, would you keep in a money market fund? Yes. Yes. Love that. Yes. So what now? A few of you are like, what is a money market fund? Great question. So at your banks, so I use Chase. I used to live in New York. Chases are everywhere there. And a money market account is an account that you pays a slightly higher interest rate. So with your banks, whatever banks you may use for checking or savings or wherever you're depositing your money, you'll have a checking account, you'll have a savings account. A money market account is like a savings account, but it pays you a slightly higher interest rate. What I have found more recently is that there are a whole series of online banks. So for example, Capital One offers an online-only banking product. Goldman Sachs has something called Marcus. American Express has their American Express online savings. those will pay you a higher interest rate. In case you're wondering what an interest rate is, interest is when you put your money to the bank will pay you a little bit of money for them to be able to hold on to your money, because then they can reinvest it. So if you have your money sitting in a bank, you may have noticed that on your statement, it'll say like, right now it's very, very low, like 0.001% or something that seems almost negligible, still something. A money market will have a slightly higher interest rate. So that's where, if you have your emergency fund, it'd be great if you could put it in a money market account or an online savings account, or basically what you're looking for is a savings account that pays you a higher interest rate. So that way the money that's sitting aside is still growing, even though it might be a little bit slower. So great question. Thank you for bringing that up. What should beginners invest through? Robinhood makes me really nervous. I did tell you I'm not on Robinhood, but just the stories that I've heard, I think on the one hand, it's great that it has all those capabilities. At the same time, going back to our toddler example, like you don't put a toddler on like a motorcycle. It's not a setup for success. And if you don't have kind of some education behind it and know all of these tools that they've given you, if you don't know how to use them, then it actually could backfire a little bit. Let me look into that. I would also, maybe the first step would be wherever your current bank is, wherever you currently have funds, if they have the ability for you to invest. There are a whole series of online platforms as well I'm thinking of, whether it's something that's like E-Trade or Schwab or whatever, like online tools there, but more connected to like a banking institution rather than Robinhood. But I would think that perhaps the first step is wherever you have your checking and savings accounts right now, or whatever bank is holding, to see what capabilities they have. Because it also makes life easier if you could just kind of have, simplify things a little bit, have it all in one space. But let me think about that one a little bit more, and I can send Wendy and Isabel a note to forward on to you. Would you briefly explain real estate business? Okay, so there are a few different ways we can go on this one. And I realize also we're getting short on time, so I apologize. But 2 seconds, real estate. Real estate is a fun one. So first, you can invest your money with the goal of buying real estate, buying your home, what have you. Something else as well is this goes into those funds that we were talking about. Let's say, I'm totally making this up, but let's just run with it. Let's say that you're like, you know what? I think people are going to go to malls again. Like, yeah, COVID was really, really bad on the mall industry. But I really think like commercial real estate is going to rebound. And here are the, I think 1, 2, 3 reasons. You could buy a share in an ETF or an index fund or mutual fund that invests in real estate. Oftentimes you'll see those abbreviated to REIT, R-E-I-T. So that's another way as well. So 2 different ways about the real estate. So you can invest by buying your home. If it's something where you'd like to invest in real estate, like commercial real estate, those funds and kind of ETFs that I mentioned before, there's an assortment that invests in all different types of real estate too. So that could be another way as well, where if you think a certain type of real estate is a good investment, for you to invest there. When it's a good time to sell stock? That's hard. And that's maybe where you might get a little greedy. So when's a good time to invest? So first, when it's time to pay for that vacation, or whenever it's time, whenever that goal is that you had in mind and you're like, you know what, it's vacation time, it's home time, we're going really long term, it's retirement time, that's when you can sell. And again, kind of take that money that you've invested and have some fun. Another thing as well could be if you think that, for lack of a better term, the game has changed. I'm trying to think of like an industry or something where you might say, you know what, I think things have changed a little bit on that company. Maybe the argument you can make is Coca-Cola. I'm totally like, we can have a discussion on this, but if you're like, you know what, I think COVID has really caused people to really focus on wellness. Coca-Cola, this is my limited understanding of Coca-Cola, is really focused on sugary beverages. Like at least Pepsi has like Tropicana and Gatorade and like the bubbly water and all that. They've got way more than just soda. Whereas Coke is soda. I'm pretty sure Coke has Dasani too. But you're like, you know what? I invested in Coke a while ago Coca-Cola a while ago because I really like their brand and they've been around for a long time. But I'm not quite sure now that Coca-Cola, you know, what they have really fits the current times. So that could be a reason why in Willow you say, you know what, I think it's time to move out of Coca-Cola and reinvest this money somewhere else. And then another thing too is maybe another opportunity comes up. If you hear about something, I'm going to make another one. All of a sudden you hear about Peloton, and all of a sudden it's like the people can have at-home gyms, and all of a sudden that's cool. That could be something else. You're like, you know what? I believe in this a little bit more than I believe in that. And I think I'd like to kind of move my investment from here to there. So a whole assortment of reasons why. I very much hope that it's to pay for vacation. I think that's the go-to reason. So I know we are at time. My understanding is that we're at time. I am happy to keep going. I defer to the Grand Zoom masters as to what's best.
Appreciate you so much. Yeah, we can answer these last two questions. I'm just going to ask, we do have a event survey that we'd like to give to students. So before you go, if you need to run, by all means, we're not going to keep you here, but please do complete that survey. It should take like 5 minutes at most, just because we want your feedback on events like this so we can keep doing them. So please complete that and you should be anyway. But yeah, if you have time, Kristin, we'd love for you to just finish up on the questions that we're asking.
Yeah, I'll keep working my way down. And for anyone who's hopping off, thank you so much. It's always, like I said in the beginning, it's a pleasure to work with you all. It's real. So, and love your questions. And the slide deck has some information on ESG, perhaps another time, or and makes sense, we could schedule another one of these and talk more about that if there's demand. Isabel and Wendy can let us know. All right, so keep plowing through this list. Where are you? What are you on then? So what do I use? So I work for a bank. So like a good employee, I use my bank system. It'd be kind of like going back to that Coca-Cola example. It's like, if you work at Coca-Cola, you're not going to walk into work holding a Pepsi. It's just one, I'm not sure, that might be more of like, as you kind of spend more time in corporate America, you learn to kind of like try to use your company's products. And they actually are pretty good. But they're not always suited for everyone though. And I mean, it's an absolute nicest of all way. And I see that little recording sign on there. The company that I work for doesn't have a great online platform. I think that what would be, or my impression is that what would be important to you all is a strong online platform where you can see your investments and you can invest yourself by, maybe like literally clicking buy or clicking sell. And so I know that our platform likely isn't the best. So that's why something like E-Trade, or again, I'm going to do some homework and come back as to like some other platforms that have strong online capabilities for you to be a bit more independent, or be able to be a bit more independent and also get more information more easily. Sorry about that. I'm going to do some homework and come back to you all. What is cryptocurrency? Great question. Bitcoin is a great example of one. So what this cryptocurrency means is it's a form of payment or a way to store value that is digital. And so Bitcoin is one that you hear a lot about. There's some others as well, but that seems to be kind of like the front runner, or the one with the most name recognition. And so, Bitcoin, it doesn't exist. It's all digital. So it's not like, like we have dollar bills. That's paper currency. Way back in the day, people used gold, like it's another physical currency. So this is kind of like the evolution of that, which is pretty cool. I'm just not sure, like people are still just trying to get their heads around how to really incorporate Bitcoin. Also, if you look up the value of Bitcoin, so like we all kind of know how much $1 is worth and how much $20 is worth. And like, you know, if we want, you know, how much something should cost, because the value of our currency is pretty stable. Bitcoin's value can vary dramatically. And so that's something as well where it's just a little bit, that's why I refer to it as like a toddler, because it has great days and then it has, you know, days that are a little tougher. And so that's why when it becomes a bit more stable, I think that there's a lot that can be done with it. And definitely the technology and these concepts behind it are applicable well beyond these currencies. Just the whole idea of being able to like authenticate something securely. So yeah, that's what a cryptocurrency is. It's digital currency is what I would refer to it as. Does any type of money lose its value over time? I believe that there's some college students on here as well, and maybe for anyone else as well in high school, if you're taking like a AP economics class, you know, someone might be being like, well, what about inflation? Yeah, like, so inflation, if your money is sitting in a checking account, or let's even take it back off that. If you have cash and there is inflation, so that means like, you know, how much it costs to buy, you know, basic goods increases, then, you know, what you could pay for, you know, what costs $20 today may cost $22 later. And so you can make the argument that, you know, your money has lost some value because of inflation. So because of the price of goods increasing. So that's one, you know, I'm sure, shout out to anyone who's in AP economics or who's taking economics in college right now. That was for you. Otherwise, any type of money loses value over time. Bitcoin potentially, again, it's very, very volatile, if we want to call that a type of currency. The other thing as well, this is with your bank, if you're paying any bank fees, there should be bank accounts that you all can have that will not charge you fees. So certainly, you know, if your bank for whatever reason is charging you, I'm making this up, a certain amount of money every month, every year, every something for you to have that account, then I think you could make the argument that your money's losing value there. I firmly believe that there are banks that you all can use that for whatever account you set up, they would not charge you money for your to work with that bank. Okay. I've been reading your next question here. Yeah. All right. So you would transfer. So Ivy's question is going a bit more into, I would call it like the logistics of investing. So let's say you have your money in a checking account. You can then transfer some money. Remember, we're not going to transfer all of it because you have your emergency fund, but we're going to transfer a piece of it to maybe an E-Trade, or we're going to link the two accounts. Anyone who's working has direct deposit set up where you kind of like a link to your company and they can kind of pay you directly. We're going to kind of set up a similar link for your checking account to be linked with your investment account for you to be able to move money back and forth between the two. So yeah, that's how you could move money from your checking account to your, let's call it your investment account. I think this is where I got to do some homework and try to better understand a little bit. And I apologize, I should have done that. Kind of a bit more as to what the best platforms are for kind of online investing. I've said it a million times, Robinhood makes me nervous, but I also have never used it. Just what I've read about it makes me nervous. So let's see if we can find some better tools for you all, or let's see if we can find some other tools for you all to consider as well. Fidelity is great. Personally, I use Fidelity because my retirement account's with Fidelity. I find they have a great online platform. So that could be something as well. I think if you are looking at different, whether it's E-Trade or Fidelity or Charles Schwab, however you want to create your investment account, I think you want to look at their online capabilities. I also think you want to look to see what sort of fees they're going to charge you. And all of these platforms may have different fee components. So if one platform is saying, hey, you can trade here for free, and whatever money you make is yours. If another platform says, hey, we're going to charge you like $15 a month, then you got to kind of weigh that. Be like, okay, well, am I really getting $15 a month of value from this one, or am I better off with that one? So Fidelity is a great platform, but I think for you guys, what I would suggest when you're evaluating certain platforms is what are the capabilities, and also like, is there any, like, are they going to charge me any fees? Is there anything that I should be aware of that could be a hindrance? Oh, thank you so much. Oh, yeah. I'm happy for you to email me or connect with me on LinkedIn. I guess one of the positives of having a name that's really hard to spell is that not a lot of other people have it. So I think I'm actually pretty easy to find on LinkedIn. And it's a similar photo. Maybe with the pandemic, the photo you all will see on LinkedIn will look, you won't have these bags. But that's okay. You guys get that. So no, I'm happy to have you reach out on LinkedIn, email, whatever. I also can defer to Wendy and Isabel too, as to kind of the best way to make sure we're here to kind of be helpful. I think I got to the bottom of the questions. If there's anything else, but yeah, ESG, we'll talk about that next time. I think that's a fun follow-up.
Yeah, we're happy to take any more topics. We can always plan. I think April's pretty booked, but for another month, I think that'd be great. And we'd love to have you back. But with that, thank you so much for everyone attending. Thank you, Kristin. A big virtual round of applause to you for taking your time and explaining everything so thoroughly. I think that was great. You have so much patience, and I appreciate that so much. And we could do like a whole topic on each of those questions. I was just thinking, like, we could talk forever about cryptocurrency. We could talk forever about real estate. Like, so thank you, scholars, too. You guys had amazing questions. I'm so proud of you for coming prepared and being so invested. And I put the link in the chat if you want to register for the next 2 sessions. They will be at the same time next week. And there's always more you can learn. So I hope you're taking notes, and tell your scholar friends because they should be here too. But thank you so much, Kristin. We will follow up with you. Thank you, staff scholars.
Have a great night, everyone.
Bye, everyone.
Thank you.
Bye.